I think that silver is probably the legacy investment of the next decade or two. I mean, if you're 30, 40, 50 years old and you want to leave a legacy for your family, certainly everyone should own some gold. But if you really want to hit a home run and you're patient, I would suggest, you put away some physical silver and store it either where you're comfortable with it or a storage facility that you can verify is on the up and up. And we might see a 10-to-1 ratio, uh, again, which is pretty close to what the natural ratio coming out of the ground is, but no one knows. I fully expect silver to outperform. It's done that historically. It's a smaller market. It's got more upside. Even the mainstream press is talking about $30 silver, and it's going to be in deficit for years.
On August 15th, First Majestic tweeted that silver will outperform gold as industrial demand picks up, says Commodities Analyst Colin Hamilton at BMO Capital Markets. With a notable presence, David Morgan has made significant contributions to the field as both a thought leader and the author of the Morgan Report. In this video, David Morgan analyzes the performance of silver and gold during the 2008 financial crisis. He underscores the precious metals' potential resilience amid market fluctuations. Prices fell to their lowest value for the year, $692.50, in the wake of the Lehman Brothers collapse on September 15, 2008. All told, the gold price declined by roughly one-third from peak to trough. Between 2008 and 2012, the value of gold increased dramatically, as is evidenced by the 101.1% surge in the Producer Price Index, PPI, for gold. As Chairman Bernanke stated, gold prices can act as an indicator of the health of the economy. However, the gold-to-silver ratio jumped as high as 80 in late 2008 at the peak of the panic in financial markets. While the move higher in the ratio was mainly due to the increase in gold prices, the peak in the ratio in late 2008 came on the back of a collapse in silver prices from $15 prior to the recession to under $10. However, Morgan mentions that if gold survives above $2,060, he predicts silver will surpass gold's performance. The gold-silver ratio has fallen below the 80 level, suggesting that silver will outperform gold prices going ahead. Furthermore, Morgan expects silver appeal to rise despite strategic networking. Banks' gold acquisition suggests a shift to silver. Central banks accumulated gold at the fastest pace on record in the first 2 months of 2023, according to a report by the World Gold Council's WGC, Krishan Gopal. Now we are presenting you the glimpse of David Morgan insights from his recent interview with Commodity Culture. Before we continue to delve into this discussion, we request you to subscribe to our channel and activate the bell icon for timely updates.
I remember for silver. So silver is at 21, and during the crash, it went really below 9. And gold went from where it was down about 30%. Both of the metals rallied rather quickly. In silver's case, it went from, I'll call it $9 to roughly 50, over 500%. And gold, if I remember correctly, was about a double. I'd have to look. So silver definitely outperformed gold. That was the second leg up in the silver market. And that was a 5-fold increase. Usually the third leg up, which we're coming into once gold breaks above the 2060 level and stays there, usually the third leg up is twice as good as the middle leg or the second leg. So if you get a 5-fold increase in the price of silver in the middle leg, theoretically, historically, it'll be 10-fold. So if we go from the bottom, we'll call it the bottom of the illness in March 2020, it's hit, I think, 12, and you multiply that by 10, you're looking at 120. If you looked at that as an anomaly, and silver was more around the $15, $18 range, and you do a factor 10, you're looking at $180 silver. Now, that doesn't mean it's going to do that. All I'm doing is giving you probabilities, high probabilities. I'm not one of these people that think gold's going to 50,000. It's going to cover all the outstanding credit, because silver and gold are actually physical assets that reflect the base money supply, or the kind of money you fold in your pocket, or M1, that type of thing. Others disagree. That's my take. And I'm not budging. I mean, if I was given different, someone could convince me I've changed my mind, but no one can or has so far. So it's an element that's used as money, and there's only so much of it, which makes it scarce, makes it precious, and makes it valuable. I really do expect what I've said for so many years, and that is the third leg up, the manic panic phase, which we have actually started in gold, but it hasn't been to the manic part yet. It's just basically gathering steam. The run to gold to start with a small walk, and the banks are taking up. Smart money's moving into gold. That's obvious. Silver, they're waiting. Maybe they're networking. Hey, don't promote silver and don't buy it. Because again, this would be a time. But coming full circle, we have an indicator now that the banks are net long. So wait a minute. Well, the banks have gone net long gold, much greater quantities than in a long, long time, the last few years, couple of years. And now maybe they're moving into silver, at least temporarily. So I am quite bullish, but the demand side that pushed the silver price up in 2020 was investment demand. And again, that's what will take place. I think there could be a time where it's difficult to source silver at the retail level. We've already seen that previously, maybe even at the wholesale level, especially if the institutions come in, because the institution buys 1,000-ounce bars like investors buy 10-ounce bars or 100-ounce bars. So if that were the case, you would see competition between industry needing silver to stay in business and investors needing silver because the money system is collapsing or they fear that it's collapsing. So that would feed on each other. So you'd have kind of a shark feeding frenzy going on because silver has those attributes of being both industrial and.
During the interview, David Morgan highlighted gold lasting value as real money while referencing Bretton Woods. In 1971, the end of the Bretton Woods system saw the abandonment of the gold standard and currencies were allowed to move freely. This shifted gold's role from being a currency to an asset with a lasting effect on its price. XAUUSD gold traders recently shared a tweet gold bullish unchanged. The current 4H trend, which remains in an upward channel, is dominated by buy orders. Concerned about support 1915 to 1917, the first pressure in 1926, after the break concerned 1932 resistance. Let's get back to interview.
We are experiencing the after effects of that event. And to me, I'll just, go to my mission statement. And that's to teach and empower people to understand the benefits of an honest financial system, or you could say honest monetary system. So we were on one at Bretton Woods, and the U.S. adhered to it until August 15th, 1971. It wasn't gold's fault. A lot of people say, gold standard never works. Look at all the times it's failed. Gold doesn't fail. It's an element on the periodic chart, for crying out loud. And it's been coveted by mankind in all jurisdictions or all places on the planet as the most voted for real money. So that's irrefutable. The problem was that the U.S. was not being honest. They're printing more pieces of paper or more receipts for gold than there was gold in the vault. So you're printing more receipts for gold than there's gold in the vault. Something's got to give. And the French and UK, the United Kingdom, both are calling a bluff the United States. It's like a card game. All right, call. Here, I'll show you my cards. Give me the gold. And that started to drain the gold pool. And Nixon really didn't have any choice. Now, he could have been honest and said, what I just told you. Of course, no politician's going to do that. So he had to come up with some excuse. And that was, it doesn't matter because it's still based on the full faith and credit of the United States, which means it's based on the full credit of the United States, which means the ability to tax the taxpayer and pay off the debt that's owed in the bond market. And of course, that's impossible now. And we all know that's why we are going to have a financial collapse in one shape or form. And it's getting closer by the day. So the repercussions are ongoing. Does the gold standard fix all problems? No. An honest system would fix all problems, or I should say all, but would certainly mitigate all the issues we have now. And it could be done in a paper market. I don't like to say that because gold's a policeman on the currency and it works for periods of time until it doesn't, as we just outlined. But in theory, if you had a receipt for all goods and services and no more than that, then you would have pretty much a sound system on paper. Of course, those don't work either, but there isn't a perfect system. But the sound money, especially a bimetallic system, where gold is really a stepping stone to fiat. There's an article written by a gentleman on Gold Eagle saying gold standard equals fiat in disguise. And when I saw that title, I had to read it. And I thought, what's he talking about? Because the gold standard, really a bimetallic or trimetallic standard is far superior. And that's proven out through monetary history. So really, that's why I've been such an advocate to put silver back into the monetary realm, which is being done. Not so much of silver stackers because they tend to hoard. They don't tend to spend it. But in the digital world where you can put it on your phone and spend it, just like you do with Apple Pay, that's where I think we're going to get more traction in the silver market as a monetary asset.
Exploring the realm of precious metals, recent insights highlight the enduring significance of gold and silver. Central banks' interest in these metals and the potential for silver to outperform bring anticipation to the market. How might these shifts shape the investment landscape for enthusiasts of gold and silver? Share your thoughts in the comment section below. If you find this video informative, don't forget to show your support towards our channel by giving this video a thumbs up and subscribe to our channel, and turn on notifications to stay informed about our latest videos covering more interesting topics. Thank you for watching.